What's going on, everybody? Thank you so much for checking in. In this video, we're going to talk about SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Apple, NVDA, Tesla, Amazon, and AMD. So let's go ahead and get started by first talking about SPY, and we're going to do so on the weekly candles. But before we jump into the charts, we have to address that this week will be a shortened week because of the holiday, which is Thanksgiving. And so volume usually slows down around the holidays, but there is one significant event that's happening that's likely going to bring the market a lot of volume on that day. And we're going to talk about that event in just a little bit. But first, let's focus on SPY's weekly candles. So looking at the weekly candles here, we can see that SPY closed its third straight week of positive gains, and it closed strongly above the 10-day moving average, which is a very impressive task to do, especially given the overall circumstances that our economy has been through throughout the year. So looking at SPY even on the shorter term candles, we can see that SPY posted this large gap up. This happened on CPI after inflation came down to 3.2% from 3.7%, which was good news for the market, and we obviously had this gap up. So coming into this week, the biggest support and focus that you should focus on is going to be the 445.90 support, which is this support right here before SPY will become at risk of filling this gap back down. To the top side, we have a resistance right around 453.65, and that comes from this rejection right here. So if we look back on SPY's 4-hour, 180-day, we can see that the last resistance that we faced before topping out right here was right around that 453.65. So we have marked that resistance here on our charts. SPY was sent down very strongly after getting rejected here. So if we break out above this resistance, that would be a very significant breakout, and it could likely rally us very high. The first price target we have in place is going to be between 459 to 460, and we will be updating these price targets in the weeks to come. We do expect the market to continue going higher, and we will give you guys those price targets in future videos, so make sure you're checking back in. Now, say buyers fail and the market sells off and SPY breaks below 445.90. The very next support we have here is going to be right around 438.40. We would turn a little bearish on SPY and the overall market if it breaks below this support, because you can see that SPY spent about 2 weeks consolidating between 433 and 438.40 before it finally gained enough strength to break out. And so if buyers see that SPY broke back below the support that it took so long to break above, then they may lose confidence and the market may move back down. So moving on to the next stock on our watch list, which is Apple, we can see that Apple is on a very strong upside rally. In fact, this is a rally that we wouldn't even consider buying because it's just such an unhealthy move. We always want to see pullback, consolidation. Anytime we see a very vertical rally, we're very wary on entering the stock. But nonetheless, we have levels and we will trade those levels accordingly. Just because you think a stock is overextended or oversold, it doesn't necessarily mean that it will continue, it will reverse on that very same week or that very same day. Sometimes stocks that have very strong upside momentum and are moving vertically, they continue going for weeks and months before they ever pull back. So here in this case, looking at Apple on the daily chart, we can see that Apple is definitely trying to move higher. In fact, on Friday when it dipped down, you can see that buyers were very quick to come in and they bought it right back up. So a very impressive move for Apple, and here are some levels that we're focused on if you are looking at the shorter term candles. Now, of course, Apple has a lot of resistance and support points just because of the way it's moving right now. It's not really our favorite chart, but if you are looking at Apple, we have our first resistance right around 192.37. We will remain bullish on Apple as long as it holds the 183.50. So even if it pulls back this week, which we would love to see, we would love to see some consolidation in a cool down period just so we're more comfortable with the chart. So even if it pulls back to 183.50, we will remain bullish on the chart and we will likely still take an upside position. However, if Apple breaks below the 181.50, you can see that below 181.50 there wasn't much support made. Usually stock goes, comes back down, creates a support, continues to go higher. Here in this case, Apple just continued moving vertically, which is very dangerous. So if it breaks below 181.50, there's not much support in which buyers may come in at, and it can directly fall towards 178. And below 178, our target is going to be right around 173 to 174. So if you are taking puts, you would want to take puts below the 180-150 mark, and your stop loss would be just above that level, just in case Apple reverses back up. The next stock on our watch list is going to be NVIDIA, which is expected to hold earnings this week. This is the event that we mentioned may bring a lot of volume into the market. Expectations are extremely high for NVIDIA. You can see that analysts are expecting them to report $3.01 for earnings per share, which is significantly higher than last quarter and significantly higher than the previous quarters before that. So of course, NVIDIA is the leader in artificial intelligence right now, which is why expectations are so high. NVIDIA's revenue has jumped significantly ever since the announcement of ChatGPT and OpenAI, and so for that reason, analysts are expecting a very, very big result from NVIDIA. If you're looking at NVIDIA's daily chart, you can obviously see that this stock is one of the most bullish stocks on the market. We have been bullish on NVIDIA for quite some time. In fact, we have an outrageous price target of around 1,000 for it, so I know that that is a very high number and very optimistic, but we have seen this movie before. We saw it with Tesla, and it's looking like NVIDIA will continue moving higher as long as the artificial intelligence craze is amongst us. So if you are looking at NVIDIA's shorter term candles, let's talk about some projections and targets to focus on. Of course, nobody knows what it will do on earnings. Sometimes a stock reports earnings and jumps $100. Sometimes they report even better earnings and they barely move at all. But we are expecting NVIDIA to move higher. Even if it doesn't do so this week, it will likely do so in the weeks to follow. So if you are trading options on NVIDIA, make sure you're giving yourself plenty of time. I know NVIDIA contracts, when you go way far out, are very expensive. And my advice to you is if you can't afford it, just don't play it. It doesn't make sense to play something you can't afford, especially when it's at risk of selling off. So here in this case, NVIDIA has a resistance at 507.40. That is right around their all-time high. If NVIDIA breaks above the 507.40 mark, then it does have a blue sky breakout in that case. So setting a price target is hard to do because we derive our price targets from previous resistance points. But when NVIDIA breaks out into all-time highs, it doesn't really have a resistance point. And so we will just have to play it as it develops, and we will be placing future price targets in future videos that we make. Now to the downside, just in case NVIDIA fails, they don't deliver on earnings and they come below expectations, NVIDIA does have a few supports starting at 481, but the critical supports that we're focused on are going to be 465 and 449. The next stock on our watch list is going to be Tesla. Tesla has struggled over the last week, and that's because of what's going on with Elon Musk. We won't get into that. I will let you guys do that research independently. But for now, let's talk about Tesla on the daily candles, where we can see that unlike Apple and NVIDIA, Tesla is trading above its 10, 20, and 200-day moving averages, but it is below the 50 and the 100-day moving average. So institutional traders and Wall Street, they utilize the 50-day moving average as the big breaking point between bullish and bearish. If a stock is above the 50-day moving average, Wall Street is usually leaning more bullish on it. And if it is below that line, which is the yellow line on our chart, then Wall Street is more bearish on it. So you can see last week, Tesla flirted with breaking out above that 50-day moving average. But just like any breakout, usually it doesn't hold the first time. It comes back down, gathers more strength, and then continues to push higher. So this week, the first thing you need to focus on if you are looking at Tesla every single day at open is where did the daily candle open in relation to that 50-day moving average. If it opened above it, then it is likely going to continue the rally higher. If it is below it, it's likely going to continue struggling. So here, let's talk about Tesla on the shorter term candles. We can see that Tesla has a support right around 226.30. This is a very obvious support. You can see that this is the point that Tesla came down and bounced perfectly at it. So one thing about supports is that they were previous resistance points. So because Tesla got rejected right around 226.30 multiple times before breaking back above it, it needed to retest it before continuing higher. So this is a good sign that Tesla actually retested 226.30 because it reinforces that point as a support. So going into this week, if you are bullish on Tesla, the support you want to focus on is that 226.30. If it breaks below it, that means the breakout failed and Tesla is likely going to fill back down towards 211. Now the first resistance and focus, of course, apart from that 50-day moving average, is going to be right around 249.30. Tesla will need a breakout above that point to continue its rally towards 257 to 258. And above that point, we have an optimistic price target right around 268 to 269. Again, with optimistic price targets, when they are very aggressive like this, these are not expected to hit the very same week that we address them. So make sure you're giving yourself plenty of time and you're checking back in so we can update you on these levels. The next stock on our watch list is going to be Amazon, which is trading above all of its healthy moving averages. In fact, Amazon is trading right around its 52-week highs. Just like Tesla failed to get above that 50-day moving average here, of course, the first breakout always tends to fail and there's a pullback before it gathers enough strength to continue going. This is exactly what we saw happening with Apple. So if you've been watching our videos, you know that Apple versus that 190 mark is a very significant level. So Apple here got rejected right around 190 and got sold off significantly, which means that 190 is a very strong resistance to break above. If buyers are willing to buy it above 190, that means they are no longer going to sell it off and it's likely going to continue. However, you can see, like any first breakout, it failed and it moved back down, and so now it's going to try to move above 190 once again, likely this week. But as far as Amazon goes, here are some shorter term price targets and levels to focus on. Amazon is bullish as long as it holds above 138.90. So if you are holding calls or if you're entering calls, you can use a stop loss just below that level. The first resistance and focus is going to be right around 148.10, and our first price target above that is going to be 151.40. This is not a very aggressive price target, so we're going to be updating Amazon in the later parts of this week with even more aggressive price targets. To the downside, if Amazon fails and it breaks below 134.17, that's when we would turn bearish on it, because this is the point where Amazon got above. You can see that this was the rejection here. Amazon got above it and rallied strongly. And so if buyers see it dip back below that 134.17 breakout, then they're going to likely turn against Amazon and sell it back down towards 130. The last and final stock on our watch list is going to be AMD. And AMD on the daily chart is forming this nice bullish flag. In fact, we just exited a piece of our position on AMD. We have been holding since right around 100 in our hyperwealth group. We just exited a piece of our position, but we are still very bullish on AMD. And here are the next price targets we have on it. The very next resistance is going to be 122.11. This is the exact point that AMD got rejected this week. And so we need a breakout above that level to continue its rally towards 125 to 125.50. To the downside, AMD has a support right around 112. If it breaks below that point, that's when we would turn a little bearish and our sentiment would turn negative on AMD, and we would consider shorting it or playing puts back down towards 107 to 108. So thank you guys so much for checking in. Don't forget, it is a holiday week, and so volume may slow down towards the end of the week. Make sure you're giving yourself plenty of time on your contracts. General trend of the market is very bullish, but you want to give yourself through December and January on any calls, just in case there's a Santa rally or a January boom and you want to take advantage of that. Thank you guys again, and have a great week.